there's a lot of concentration and focus by the market in terms of AI-related stocks. Nuclear energy and uranium really stand out to be one of the main benefactors in that regard, and I think it's going to help continue to supercharge the sector.
Hello, you're watching Proactive. I'm joined by Jacob White, Director of ETF Product Management at Sprott Asset Management. Jacob, very good to speak with you. Your latest uranium report points to a persistent market disconnect. Uranium mining equities struggling this year, even as the fundamentals have improved. So why is the market getting it wrong?
Yeah, great question. So like you said, uranium miners have been down in the first half of this year. But when you look at the term price of uranium, which is where the vast majority of uranium gets contracted and where the uranium miners are actually selling their uraniums to utilities, it's increased to $94 per pound. And that's the highest level this cycle in this bull market. And it's also the highest level in 18 years since the last all-time highs. And so we're in a situation where uranium miners' fundamentals in terms of demand and supply have really never been stronger. But the market has been kind of not focused on the and whether that's because of the war in Iran or the concentration in very, specific AI-related stocks, they haven't rewarded the strengthening fundamentals for the uranium miners and their earnings and the increasingly positive demand that's really come through.
You argue AI is becoming a major driver of uranium demand. How does the growth of AI translate into a stronger outlook for nuclear power?
Absolutely. So AI has increasingly energy demands. So AI needs 24/7 energy and a lot of it. It is actually restarting the US in terms of it's had about a couple of decades where there's not really been any energy growth in the US, but now there's going to be significant growth because of AI data centers. And AI data centers need 24/7, consistent growth, which and a lot of these big tech companies are, kind of carbon neutral. So when you talk about solar or wind or these sorts of things, they're intermittent and they don't match that demand profile. So nuclear has become one of their preferred ways in order to access the sector. And they've done things like restarting 3 Mile Island and purchase power agreements for 100% of nuclear power plants' energy loads. And so you're really seeing increasing demand for nuclear and then for uranium because of the energy profile of these AI data centers. So like I was talking about before, where there's a lot of concentration and focus by the market in terms of AI-related stocks, nuclear energy and uranium really stand out to be one of the main benefactors in that regard. And I think it's going to help continue to supercharge the sector.
Energy security has become a global priority. How has that changed the investment case for uranium?
Absolutely. So the war in Iran and the closure of the Strait of Hormuz has really woken up a lot of countries to the fact that hydrocarbons are trade dependent. So a lot of this first happened actually with the Russian war in Ukraine, where the natural gas coming out of Russia became a problem, and now with oil through the Strait of Hormuz. So whether it's countries not actually receiving their energy supplies or just generally the financial shock that has increased energy prices globally, and these countries have woken up to that energy is a national security priority, and that nuclear energy is one of the only types of energy that really helps provide stable baseload power reliably, and does not have that trade dependency that fossil fuels have. And so we're seeing countries around the world, increasing their nuclear power plants. Canada just recently announced another 10 large new scale reactors plant. The US gave a $17.5 billion loan for, again, up to 10 new reactors. Countries in Europe are U-turning, where Belgium, for example, was going to decommission all their nuclear power plants. And now they're going to suspend all decommissioning and reverse that. So as a result, we're seeing increasingly strong demand for nuclear and uranium.
So it looks like governments are backing nuclear with new reactors, life extensions, and also funding. Is this finally the turning point the uranium sector has been waiting for, Jacob?
Absolutely. So I think, this transition has been occurring over the past few years, and this is hopefully going to start up another leg within that bull market. I mean, we're starting to see not only the developments that I was just talking about in terms of new reactors, but China, for example, continues to lead the world in new reactors construction and planned. But you're also seeing not only funding for these sorts of things, but life extensions, where Diablo Canyon just got a 20-year extension, and that creates more immediate term demand relative to, for example, SMRs that continue to receive funding, these sorts of things. And then beyond that, you're also seeing regulatory reform, where a lot of the things that have inhibited nuclear from advancing is these long, lengthy, and timely and costly permitting processes with regulatory bodies. So the U.S.'s Nuclear Regulatory Commission was mandated by the Trump administration to significantly shorten that, and they recently came out with an 18-month review target for new reactor designs. So all these sorts of things, whether it be funding or permitting or just general increasing their targets for nuclear energy, is really increasing the demand, and I think helping set the stage up for the next leg of the bull market.
So Jacob, if you're right about the long-term outlook, what are the key catalysts investors should watch out for over the next 12 months?
Absolutely. So one of the things is that the uranium market has been in deficit for many years. And the contracting, so how much utilities have been buying uranium, they've bought less than they've used in each year for the last 13 consecutive years. So they're below what we call replacement rate. And when we look into the future, utilities generally contract in the term market about 5 years out. They're starting to have much larger uncovered requirements in that time frame, which is limiting the runway that they have to not contract. So I think that inventories that have historically been relied on to kind of plug the gap from supply and demand are now at strategic lows. You're at a point where nuclear energy support has never been stronger, and so utilities will have to start contracting. And the supply perspective is such that major producers have come out and said that the current levels, even though the term prices, all-time high in 18 years, are not at levels that will sustain an increase in further production. So in order for us to get back to a supply-demand balance, the utilities are going to have to contract, and that timeline is running shorter and shorter as we move on. So we think that with the weakness recent weakness in the market, it may provide an opportune time for investors to invest in uranium miners.
Jacob, thank you very much for your insights. Great speaking with you today.
Thank you for having me.
That's Jacob White, Director for ETF Product Management at Sprott Asset Management.
The featured company is a paid client of Proactive Group Holdings, and this recording is disseminated by Proactive on its behalf. It is for informational purposes only and does not constitute investment advice, an offer, or a solicitation to buy or sell any securities. Viewers should conduct their own research and consult a qualified financial advisor before making investment decisions. The views expressed are those of the speaker and do not necessarily reflect those of Proactive Group Holdings, trading as Proactive Investors or its affiliates. No responsibility is accepted for any loss arising from reliance on the information presented.